Hi everyone. Today let's talk about Eurozone inflation. Then we'll talk yield curve, as well as the economic factors for next week, and of course Max Payne. Then we'll get into the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at Eurozone inflation, I don't talk about overseas markets too much here, but it is interesting that their inflation is still a little bit more sticky than ours. Their core CPI is at 5.4, headline here at 5.5, which was basically in line with expectations. They do mention that core inflation in May was 5.3, so a slight tick up, again highlighting that it is quite sticky. And then they talk about the European Central Bank, which did do 25 basis points in June, up to 3.5, while the US Federal Reserve did pause at the last meeting. It does make sense because they are at such a low rate in comparison, and their core CPI rate is much higher than ours, so they do have a little bit of catch up to do if they are going to get their inflation down, in my opinion. The US is in positive real returns with our rates right now versus CPI, and it's probably likely that they are going to have to do the same, and they're already seeing some cracks in their economy in terms of slowing economic growth. I also saw this article saying that the EU is on the brink of bankruptcy, coming from Hungary's leader, Orbán, at the EU summit. He says they're at the brink of bankruptcy, and he wants to know where the money has gone. He mentions they lent $50 billion from various states to the Ukraine, and Poland and Hungary have not seen a single cent on those loans yet. He also mentions that the EU Commission continues to raise their salaries, and Hungary wants to see some accountability from the EU Council on where this money is going, and they say again he thinks that they are on the brink of bankruptcy. This might be a little bit overblown here, but it is definitely concerning that a major state player in the EU is saying that the EU might be on the brink of bankruptcy. Moving over to the yield curve, we have been inverted for a very long time, and I did want to mention it once again here. The yield curve is still signaling recession, and it continues to do so. We've seen consistent GDP growth, so we're not seeing recessionary factors quite yet. You can see it is stepping down here slightly, which makes sense with the yields going higher. And looking at that chart of the yield curve, you can see we're getting very close to the lows here from March of 23. Once again, this is the 2 to 10 year spread. We look at these charts quite often here, and they are at basically peak levels, once again indicating that a recession is coming. Typically, you see the yield curve uninvert before the recession comes, and I kind of thought we would see that start to push into reversion after this last rally, but since then, the 2-year yield has rallied aggressively, and the 10-year has been flat, and you can see we're back at those peak levels. So recession not coming quite yet. GDP still looks good. Yield curve still very inverted, and we need to see this revert before we should expect that recession actually taking hold. Moving over to this chart, looking at economic leading indicators from Game of Trades. I do like them a lot, and I've mentioned them several times. They did put out this data here yesterday, looking at economic leading indicators versus net earnings. You can see earnings moving higher, economic indicators not moving up with them quite yet. And if these start to weaken and move lower while earnings are staying higher, we might see this dip down, similar to what they're highlighting here from the 2008-2009 crisis. Obviously, we don't have a global recession or a situation where the banks could potentially crash the entire economy, but we are seeing a slight disconnect in a similar way. And if earnings do move back towards these economic indicators, the same way that they did here previously, that could be quite bearish. We could also see the inverse, where earnings start to move lower and economic indicators move higher, and that does also tend to lead us out of recessionary periods. And in order for us to avoid that kind of a situation, we need to see economic indicators move back towards earnings, similar to what we saw moving out of the lows from 2009. They move up together, and that's a pretty healthy rally. And if this does not move up here together and we start to see earnings taper off, that could be an interesting indicator. That could be an indicator of lower prices to come. Moving over to the economic calendar, I wanted to mention those EU CPI numbers that came out on Friday. You can see headline 5.5 versus 5.6, core 5.4 versus 5.5, but that was a step up from the 5.3 like we mentioned. EU unemployment rate at 6.5. Like I said, they're facing a little bit more difficult economic conditions, which is part of why their interest rates aren't quite as high as ours. Moving over to next week, it is 4th of July week, so we have a short day on Monday. I would expect pretty low trading volume based on that. We do have some interesting data though, manufacturing PMI as well as ISM manufacturing at 10 o'clock. Tuesday, Independence Day, will be closed for that. Services PMI on Wednesday, FOMC minutes here at 1400. I would expect to see some details on those 2 rate hikes that they mentioned. I'm pretty curious to see what they said about it. Looking at Thursday, EU has retail sales, expected to step up here slightly, initial jobless claims, services PMI, ISM non-manufacturing PMI. We also have the JOLTS report this Thursday. That'll be interesting to see if we're starting to get that increase in unemployment. We've seen it slightly, but it continues to be choppy based on last week's numbers. And then looking at Friday here, we have non-farm payrolls, private non-farms, unemployment rate, which again has stepped up slightly here. And if this continues to come back a little bit higher than expectations, that could be the early stages of letting us know that a recession is coming at some point in the future. Moving over to max pain for the Friday close of next week. It's a light week, only 700,000 options so far. Put call ratio still fairly high at 1.6. We'll talk about that a little bit more, but max pain down at 432, much lower than current prices. I wouldn't expect max pain to matter too much with so few options in the market, but peak calls here at 448. I would expect that to be your upside limit for the week. Top of the puts here is right at 443 to 445. That's the same close that we got last week. Fairly interesting level. Something between 435 and 440 would also make at least a little bit of sense, but like I said, 448 would be the peak in my opinion. I do want to zoom out here just for a moment. You can see the put call ratio is a little bit inflated because of all of these puts way down here at 335, 350, and 365. Tons and tons of puts down here at this lower level. Not going to have a huge effect on current prices, so we could absolutely see a little bit of a decline based on how few puts are in the market at these levels. And if you zoomed into this chart specifically, I would expect that the put call ratio was actually below 1, and it's a little bit inflated because of those much lower puts. So it wouldn't surprise me if we saw a little bit of a decrease in prices going into this week. Moving over to the charts, starting off with the S&P 500 here on the weekly chart, you can see momentum still bullish, RSI still bullish. Might see this get into overbought conditions next week. It is a slightly lower level than the previous week, which is interesting. We do have a higher close and a lower RSI read. Plenty of room here to the upside for major trend resistance. In terms of horizontal resistance, we're kind of looking at these previous highs going back to August of 21 or March of 22, kind of in no man's land, not really at that level quite yet, but this slight divergence on the weekly chart is interesting. We could absolutely break that if we continue higher and get a higher RSI read, but it is something worth watching going into next week. Moving over to the daily chart, similar thesis. You can see that clear divergence between that previous peak and current levels. We have the same price, but a lower RSI read, momentum kind of fading. You can see those horizontal levels watching 445.49 at this point. If we do get up to that level and get a clear rejection with a lower RSI read, that could be a pretty good indicator that we're set for a somewhat bigger pullback in my opinion. Doesn't have to be something as large as what we saw here from February into March, but it does seem like we need something a little healthier compared to this rally that we've seen going all the way back to March of 23. If 445.48 breaks, I'm watching 448.74, which is also a pretty interesting level, about 2% higher from current prices. Moving over to the NASDAQ on the weekly chart, you can see on that weekly candle, we did come down to that trend support, which is interesting. Tagged that level and bounced again. We got a new high close similar to the SPY. Unlike the SPY, however, we are testing this April high, hitting those levels, finding a little bit of rejection. If we get a clear break from that level, we start to push up to major trend resistance at 16,600. It'd be a huge push from here, and that would absolutely cap it off for me in my opinion. Momentum stepping down slightly, RSI looking at divergence, but overall still bullish going into next week. Moving over to the daily chart, still watching 371.25. Been talking about that level for a minute now. That was the previous wick high from 2 weeks ago. Now we're getting close to testing that level once again. Momentum did step down towards bullish. RSI definitely weaker here. You can see that clear divergence. Volume did step up, which is good. If this is going to continue, like I said, I want to get above 371.25 and then start that push up to 376.45 and potentially 381.90. Those are the levels that I'm watching for some signs of rejection. And like I said, I want to see that RSI step down, divergence invalidated with a nice push higher with higher prices. Moving over to the Russell on the weekly chart, you can see bullish momentum, bullish RSI. Again, still looks good to me. Above all the EMAs and SMAs except for that 144 sitting up here. I still want to see a push above 189, ultimately finishing up around 195.15 in the short term. And this still looks good to me, like I said. I think that the Russell will be moving up next week. Moving over to the Russell on the daily chart, you can see we saw a gap up, a little bit of a fall, still holding at this trend support. We're stuck in this zone, kind of like we were going back to 2 weeks ago, chopped in here for a while. We did find a much higher low versus this previous low, and I would expect this to break out at some point. Like I talked about in the Friday video, I think the Russell looks quite strong. We've looked at the ratios multiple times during the week, and last Sunday's video, I think the Russell is set for a bit higher move, at least up to these previous highs, up around 195.15 or so. That would be interesting. Momentum moving towards bullish, RSI also moving towards bullish, above the SMA, above the 50 line, and everything looks pretty good here on the Russell going into next week. Moving over to the Dow here on the weekly chart, we got a very strong close, very close to the highs. We're above some of these wicks here. We're above 343.23, and everything looks clean going up to this next high at 347.67. Certainly could get a close like that, and then start to push towards 350.92. Definitely interesting. Again, much higher low coming off of this previous low. Tested VWAP, looks clean, momentum bullish, RSI looks bullish. Volume has been fairly restricted here, and I would like to see this start to climb a little bit into next week if we're going to see a really solid push over the next few weeks. Something like this push from June all the way into August, that would be nice. Right now, we've been chopping in the zone. We're right at the top of it, and it does seem like we're kind of set for a fairly dramatic move on the Dow. Moving over to the daily chart, it looks a little bit more precarious. We have a gap up, a doji, and if we do see a gap down, that could be interesting. Could absolutely set up a higher low or retest this trend very close to 339.11 and then start looking for that bigger push. Or this is going to turn into a gap and go, and we're going to see a rally on Monday. Momentum still bullish, RSI above the SMA and looking bullish. You can see a slight step up here in volume. Really want to see this push a little bit more here, similar to what we were seeing here, and then get back up to that 347.67 level. Overall, the Dow still looks pretty bullish on the daily chart. Moving over to some economic factors, starting off with copper divided by gold on the weekly chart. You can see that big wick that we got last week. A little bit of a move down, retested VWAP. We're still above the 9 EMA here on the weekly chart. Momentum is still bullish, RSI slightly below the 50 line. And really, if this is going to hold, you want to see it hold at least at the 9 EMA at 19.15. We could start to find a base and a higher low as we start to rally back into this mid zone, maybe up to these previous highs. That would be interesting. The SPY has headed much higher, and this ratio continues to sit a little bit lower. And like I said last week, I do want to see these start to move a little bit closer. Or at some point, we're going to see the SPY pull back, and these are going to re-intersect, just like we've been doing here for the last year or so. When the SPY gets extended to the upside, it usually falls back down to the ratio. Or if the SPY is falling and the ratio is holding, eventually the ratio will come back into contact in that same direction, chopped in this same zone, and now we have another disconnect, waiting to see whether this ratio rallies and catches up, or if the SPY is going to pull back and we're going to see a chop back in this same zone. Moving over to the equal weighted S&Ps, you can see we are catching up a little bit. Regular S&Ps started to break off here in May, started going much higher. As the equal weighted was dipping, equal weighted caught up a little bit, markets went higher. And now the equal weighted looking to break above 149.82 and start to push up to these next highs up around 154. That would be nice. And that would also give us some room here. And that would also allow the equal weighted to catch up a little bit. Momentum bullish, RSI also bullish. Everything looks good here for the equal weighted to continue higher. We've been talking about breadth for a while and how it continues to improve. And it makes sense that the equal weighted S&Ps are starting to move a little bit closer to the regular S&Ps, confirming the rally a little bit more to the upside in my opinion. Moving over to the ratios, NASDAQ divided by SPY and NASDAQ divided by Russell. You can see NASDAQ divided by SPY is at a clear resistance at 343. We've been talking about this level for a while here. Marks the tops going back to August and September of 20. We saw a little wick above it and then a clear rejection back below. Similarly here, got back above it, and a clear rejection lower. We've never really been able to maintain above this level for any length of time. This is the weekly chart, so you could argue this is about a month or two above this level. But either way, this is a peak zone, and it tends to pull back from this area. We're here once again, finding resistance. It does seem like we're going to get a little bit more of a pullback into next week. Momentum fading, RSI also moving lower out of overbought conditions. And it does seem like the SPY is going to outperform the NASDAQ at least a little bit. And we did see that on the Friday session. Moving over to NASDAQ divided by Russell, we're basically at all-time highs. The only time we've ever been this high previously was during the dot-com bubble, so very, very extended to the upside at this point. And you can see we're getting some rejection from that 818 zone, pulling back from that area once again, looking at 788 as your next support to the downside. Again, momentum pulling back, RSI pulled below the SMA, retested that level, and we're pulling back here once again. This looks quite weak here on NASDAQ divided by Russell, which makes sense. I talked about the Russell looking to outperform over the coming weeks, and both of these ratios are pointing to the NASDAQ pulling back and the Russell looking to outperform. Moving over to SPY divided by the M2 money supply here on the weekly chart. We have a little bit of divergence this week, just like on the regular S&Ps. Higher prices, lower RSI. Momentum still bullish. We're well above that 21-22 level at this point. Closed above it for the first time, going all the way back to January of 22. At this point, it still looks like we're going to get that push up to 22.05. That's the same level that marked the top here in November of 21, as well as the top in February of 20. If we get into that zone, I would expect that to be the top once again. If we even make it to that point, anytime we get into this zone, we've had a pretty clear rejection. We held in the area for a few weeks here. From January of 20 to February of 20, we got above it again in July of 21. Slight dip here, tested that zone once again, November of 20. November of 21 all the way until January of 22, and then we broke much lower from that level, so very high level. So as we move into this zone, just be aware it's fairly difficult for the markets to maintain this kind of pricing, especially with the M2 money supply continuing to shrink with the higher interest rates and the Federal Reserve balance sheet continuing to offload securities. Moving over to individual stocks, starting with Apple, you can see the run we've been on, super bullish. Talked about it in the Friday video. I have resistance right around $200 off these longer term trend lines. Makes sense that we would get into that zone and then start to find rejection. Key psychological level at that point, but otherwise still very bullish, very strong close. Momentum's bullish, RSI super overbought at the 78.63 on the weekly chart, but absolutely you can't bet against this. Super bullish, continues to rally, barely even any red candles. The red candles that we did have were basically dojis, and everything looks clean here on Apple as it continues to drive towards that 200 price target. Moving over to Tesla here on the weekly chart, you can see we continue to test this 264.68 level. We've been talking about that level for a while. We filled this gap here going back to September of 22 with that wick, and now we're starting to pull back from there. You want to see it get above this level and hold and start to push up to 301.93. Off this initial rally, I thought we would get into this zone, retesting these previous highs. That would be a very clear level of resistance with some stops behind those highs. I still think that's possible. Momentum is still bullish. RSI not overbought yet, and it certainly seems like we could continue higher here into that level. But like I said, 264.68, very clear level of resistance at this point. You need to see that break if you're going to look a little bit more bullish on Tesla. Moving over to Microsoft and NVDA, you can see Microsoft right at its all-time highs, getting into that zone. We've tested them once here, going back 2 weeks, rallying off the 9-week moving average. 344.86, very clear level, could present about 1% more of upside before we hit that resistance. Momentum is fading, and RSI is also fading here, and it does look a little bit weaker than it has recently coming off of this previous rally, starting to consolidate at resistance. Fairly interesting on Microsoft. NVIDIA got a hanging man candle on the weekly chart. Momentum also fading, super overbought at 85 on the RSI, and it is starting to pull back slightly. Slight step up on bearish volume. Obviously, we're still at all-time highs here with NVIDIA, just a few percentage points off. But again, this looks a little bit weaker than it has recently. Doesn't mean I'm going to short anything at all-time highs right now, especially NVIDIA, but definitely interesting off of that hanging man candle to see if we get a little bit more follow through to the downside. Moving over to staples and discretionary, staples still looks pretty strong above that 74 level, holding in that zone, looking to rally up to 75.40, coming off of trend support in the 55-week moving average, momentum stepping towards bullish, volume stepped up as well, RSI looking across that 50 line here on the weekly chart going into next week. Definitely some shorter term EMAs and VWAP on the weekly chart to pay attention to, but it does look okay as we move into next week. Discretionary had another very strong week, closing above 166.78. Clear resistance at 171 off of this trend line that I'll be watching. I don't think that's going to stop it. I think 174.76 is a clear level at the top of this August high. They're very close to each other, and usually you get an overthrow of a trend line if you have horizontal support right behind it. So 174.76, clear resistance in my opinion on discretionary. Otherwise, momentum super bullish. RSI just barely off of overbought conditions at 69.63. Volume, not too bad. Didn't step up very much on that bullish candle. But either way, at this point, I think we're destined to hit that previous August high at 174.76. Moving over to energy and financials, looking at a little bit more value plays, you can see energy coming off of this base of support, definitely below some EMAs and SMAs on the weekly chart, but stepping towards bullish. RSI looks good, back above the SMA on higher volume, looks fairly clean for a push back up into this 83.55 level, or potentially back into these previous highs at 87.37. Energy looking pretty good going into next week. And with that close at the high of the candle, I would expect some follow through. Looking at financials, you can see a similar candle, close right at the high, momentum bullish, RSI above 50, above the SMA, looks pretty clean, and certainly looks like we could get a move back up to 37.16, which would be a nice little 10% move from current levels up to these next highs. We're above all of the shorter term EMAs. You got the 144 sitting up here at 34.55, certainly could be some resistance, but it does look like we're moving higher into this previous high, and then the next highest traded volume is up around 38.24. Again, financials looking pretty strong coming off of the 200-week moving average. Moving over to transports on the weekly, I've talked about this a few times at this point, but still looks very clean. Close right at the top of the candle, momentum super bullish, RSI super bullish, looking to take out these previous highs. And if we do get a clean breakout, I would start looking for a push up to 276 back at these previous highs. Certainly could find some resistance in this previous consolidation, but it's going to be a very clean break above these two previous highs, and that should generate some momentum up into this next range. Moving over to breadth on the weekly chart, talked about it in the Friday video at least a little bit. Strong candle, strong close, both charts looking very clean. Not quite getting into resistance levels yet. 55 could get up to 77.46. And if we do get into this 92.25 area on the 50-day average, that's a very clear topping area for this indicator. It's marked many, many tops. Definitely an overbought condition on the 50 if we get into that zone. We're not there yet, and it does look like we're moving back into that area. We could have another couple weeks of bullish price action, just like we saw here, getting into that zone before we see any kind of pullbacks. 200-day average, very similar, sitting in this previous high. We've had some pullbacks from this zone a few times, but it doesn't mean we can't push up to 76.04. And again, if we get into that 91.42 area, or really even above 76.04 for any length of time, that's typically the area where we start to see topping. We're not there yet, and everything still looks a little bit bullish going into next week. Moving over to the dollar here on the weekly and the daily. You can see the daily is in this channel. We had a strong down move on the Friday candle. Still holding this trend, still above the 9 EMA and the 55 EMA on the daily chart. Did get below my level of 102.89. I want to see it get back above there and hold and start to push back up to 103.64. Either way, looks kind of neutral coming off of this zone. We had the rally, looked aggressive. We have a higher low setup. Chopping in this area doesn't look super aggressive to the upside. Weekly momentum, not super convincing either. RSI below the 50 line, but above the SMA, kind of neutralized here in the middle. Not much to say on the dollar, continues to chop in this zone, not giving us any kind of clear direction yet. Moving over to J&K here, you can see we did have a nice week, closed near the highs, coming off of that trend support, pushing up to 92.50. I want to see it get there and hold above it and start to rally. That would be nice. Momentum, slightly bullish, but very minimal. RSI crossed above the SMA and the 50 line once again. We also got a close above the 55-week moving average for the first time in a very long time. Looks pretty clean. Again, looking bullish. Strong step up in volume on J&K. TLT, not much. Hanging man candle. We're below all the EMAs and SMAs on the weekly chart once again. Hit that highly traded zone at 102.10 and 102.50 and closed above it, so not terrible. Strong bearish volume on the week, and I would expect this is probably going to sell off at least a little bit next week, potentially down to that 100.05 level, which was the bottom from 22 May. Moving over to the VIX, not much to say, slight step up. We've been basically in the same zone here for 3 weeks. Hit that trend one more time. If it's going to hold above that level, if it's going to start to see a step up, we need to see that next week. Momentum starting to move towards bullish, fairly interesting. RSI still very bearish. Still below all the EMAs and SMAs. We have longer term horizontal support at 1177, not anywhere near that area yet, and we are below all of these previous lows, so consolidating in the same zone. Certainly could hold in here for a long time, just like we saw here from April of 18 all the way up until October of 18, so many months in that same zone. Absolutely could do that again. Doesn't mean we're going anywhere and not showing us much of anything here on the VIX. Moving over to my accounts, I didn't do terrible. I made a little bit over $1,000, which is very similar to what I lost the previous week, so basically break even between those 2 weeks. I had a little bit less volatility, which was nice. In terms of positions, I have some puts here looking to get into some positions on the IWM. I talked about being bullish on the IWM over the next few weeks, and I still think that's true. And I do want to make some plays based off of my analysis. Looking at the Qs, I have a position down here at 366. I think we might see a little bit of a pullback on the Qs. I might start looking at the SPY as a better option in the shorter term, or I'll be a little bit more focused on the IWM potentially and start to scale into those positions with a little bit more size. We'll see how that plays out, but right now, a little bit more conservative on the Qs and a little bit more aggressive on the IWM. Let me know down in the comment section what you think of the Eurozone and their current inflationary and economic environment. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.